Hello everyone, good morning and welcome to this educational presentation of 2 trading rules that can help you become a consistent trader. Now the theme of today's webinar is consistency through simplicity. I'm going to show you just how simple it is to become consistent. If there's one thing I've learned in my 42 years of trading, it's been that the simple things are the things that actually work in trading rather than the complicated ones. I know we've always been taught the opposite. But really, if you keep things as simple as possible, that's where you start to get onto that road to consistency. Now, for example, let me share with you this current chart here. This is an MYGN. This is the way most traders trade. They overcomplicate things by trying to put too much analysis and too much information on top of a chart. For example, let's say you took that $10,000 class about support and resistance, and you say to yourself, well, this is a range market because the institutions are selling and because the stock is waiting for the economic news to come out. Also, there's an earnings report due, and the fundamentals don't really add up, along with the volume and the summer. You see all the analysis I'm putting to overcomplicate things. Where with the 2 rules I'm going to be sharing with you today, they actually would have identified a buy signal right here, along with another one right here, based on simplicity. None of the things that we've commonly used to analyze where a stock or a future or currency pair is going. And then just days later, the stock gained 20 points. Now, someone would say, well, how did you know that? How did you know? Did you follow the news, or did you have some inside information? No, the only thing we took was from the information that was given to us on the chart, keeping things as simple as possible. You're going to see how easy it is to apply these 2 rules today by applying them and using them with our PTS Primo Charting Platform. I designed this with Pro Trader Strategies, and we truly believe this is the educational platform that you've been searching for because it really makes trading simple. So welcome once again to this educational presentation. My name is Stephen Primo, President and Founder of Specialist Trading. If you're new to my Saturday webinars, it's totally about educating you. That's all we really want to do. We don't want to promise you that we have some system that generates tens of thousands of dollars on a monthly basis, that you'll be retiring by the end of the year, that there's nothing you need to do except really push a button. In fact, we don't believe in any of that. All we really want to do is educate you. That as educators, we're filling that void that we feel is missing with most traders, because most traders fail. It's been estimated upwards of 85%. And it's our belief because they're not educated enough. And when you're not educated enough, when you really don't have the information to make your own decisions, what's the first thing you do? Well, you rely on some $10,000 system. You go to some trading guru or read some fundamental news that's supposed to give you the answers, right, of what everything's supposed to do. And that's where you get your trading ideas and your answers from. But the one thing you're not getting them from is from the chart in front of you. And that's what we do. We supply you with the information and show you how simple it is, much more simple than the things you've been following, so that you can fully be in charge of your own trading destiny. So this is our goal at Specialist Trading and Pro Trader Strategies. And you'll see the attention to detail we give into teaching you in today's educational presentation. But before we begin, as always, we are required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results today using these 2 rules. But please remember that we can in no way guarantee that any of the performance results I'm about to share with you will be repeated in the future. And also remember that all examples are strictly for educational purposes only. And also, I'd like to invite each and every one of you, if you haven't done so already, to follow us on Twitter. Here is our handle right there. You may want to copy that down. Every day I post different information, educational information about trading in all the markets, not just stocks, futures, currency pairs, Bitcoin. All of our techniques and methods can be applied to all of those. So feel free to follow us on Twitter. A lot of free, great educational information posted on a daily basis. Now, once again, as I stated in the opening statements, we're different from other webinars you may have attended in that we are strictly an educational company. As you see here, my goal is not to force feed you signals or tell you what to buy on a nightly basis, or tell you what the perfect time frame is, or tell you this is the perfect sector you should be following, this is the perfect market. In fact, we don't believe in that. You should be deciding those things for yourself. This is the specialist edge. This is the education that I was taught some 42 years ago, that I really believe has been the cornerstone to sustaining me for that amount of time. And this is what I want to instill into you and pass on to you, this education that was given to me. Hopefully it will sustain you for that same amount of time. Now, I'd like to start out by sharing with you what my mentors taught me, because this was the beginning of the education on my part. And here is our daily financial wisdom coming from my mentors. one of the first things they ever taught me, which has stayed with me, and it's the theme of today's presentation, is that they said, Steve, it is the easiest thing in the world to overcomplicate your trading. Now think of it. Virtually anyone can do that. If you're trading 20 minutes or 20 years, you can pile on as many things as you want onto your trading plan. Tons of indicators, tons of fundamental news, tons of charts in front of you, tons of information. Anyone can do that. It doesn't take a lot of character to overcomplicate your trading. But it is the most difficult thing in the world to simplify your trading. Now that really takes character, because you have to have the courage to strip away all of this, these things that for so many years we've been taught are, traditional wisdom is supposed to work. I mean, I was always taught to follow the news. I was always taught to follow the earnings. I was always taught to follow what the institutions are doing, what volume is doing, what the overall economic conditions are. And trust me, I used those things for going on 2 years, and nothing worked with consistency. It would work every once in a while, but like the slot machines, you get a nice win every once in a while, but it's designed to have you stay there. So ultimately, if you keep doing the same thing, you're going to give it all back. So trading was just like gambling for me. I'd have a couple of good winners every once in a while, and then I'd give it all back. So this is why most traders fail, because they're overcomplicating their trading. You don't need to pile on this many things on your trading plan. I mean, I'm not here to tell you how to trade. I'm just sharing with you things that I've found through myself and other traders that have stood the test of time, which really lead to consistency. If you want to look at fundamental news, if you want to look at what the institutions are doing, if you want to have a system that spits out buy and sells for you, that's fine, okay? But if you want to keep your trading simple and be in charge of your own trading destiny by making your own decisions, then you have to have the courage to strip away what my mentors called useless noise and focus on the most important thing, which is the source of what you're trading. That's the chart in front of you. Once you do that, you'll see that trading is really simple. It's extremely simple. You just have to kind of follow your small amount of rules here. It's almost like fishing. If you're trading correctly, it's like fishing. It's very boring. You're just pretty much sitting and waiting, and then you hope for a nice catch. But that's when you're doing it right. When you're doing it wrong, it's extremely frustrating. It's very emotional, and there's a lot of turbulence going on in your life. That means you're really not trading correctly. All right, so that's today's daily financial wisdom. Let's begin with today's lesson. We're going to be talking about the 2 rules, and it's going to be based in simplicity, as I just shared with you. So let's go on to rule number 1. Buy signals. Whatever strategy or method you're trading can only be entered above the 50-period moving average. So what does this mean? It means that, first of all, I don't care what you trade. I don't care if you trade, like I said, Bitcoin, stocks, futures, currency pairs. Makes absolutely no difference. I don't care if you're an investor or a day trader. Makes no difference. You have to have a 50-period moving average on your screen, on your chart. And then whatever your strategy, your system, whatever it is, I don't care what it's based off, could be based off the full moon, could be based off earnings, makes no difference. Whenever it generates a buy signal, whenever all the rules have been met, that price must be above the 50-period moving average. Okay? Why? Because you will have a higher level of consistency if you are in sync with the overall trend. So let me show you what I mean here. So we look at this generic chart. Once again, most traders say there's absolutely nothing happening here. We're in a range. We're going down, back up, back down, right? Stay away from this, right? There's probably a whipsaw market. Well, not really, because once you add the 50-period moving average, you ask yourself, where is price in relation to that 50-period moving average? Price is above, right? So if price is above, what is the market telling you? Not some so-called guru on TV or not some fundamental report from some brokerage house. What's the market telling you? It's telling you the overall trend is up. So do you want to swim against the trend? Do you want to, buck the trend and say, well, I'm going to do the opposite. I'm going to fight it. Well, this is the way we've always been taught, right? Buy low, sell high. But in all actuality, what you want to do is buy high, sell higher. This gives you a higher level of consistency. Now, the same thing works for the downside, all right? If your strategy, your system, whatever it is, generates a sell signal, say you want to buy the puts, say you want to actually sell short the market, all right? This can only be achieved if you enter, in other words, if your setup, if your signal is below the 50-period moving average. In other words, if you get some signal that says, sell the market, sell it, it's too high, it's tremendously overbought, all these gurus are telling you to get out, every indicator is pointing that it's going to go lower, and you see where price is and it's above the 50-period moving average, I wouldn't take it. Sure, it may work every once in a while, but over time, if you follow that same system, you can give it all back. Take it from someone who's been there. I've done that so many times. I've left so much money, with the markets because I tried picking tops and bottoms. How about, as we said earlier, keep your trading simple. Once again, a generic chart here makes no difference what this is. Could be a tick chart, could be a monthly bar chart. Makes absolutely no difference. Looks like it's an arranged market, but in all actuality, it's below the 50-period moving average. So what's that telling you? It's saying that the overall trend is down. Do we want to buy if the overall trend is down? Absolutely not. Once again, this is not 100% foolproof. I'm not telling you that every buy signal that is below the 50 will never work. We're trying to instill consistency in you because consistency is the name of the game. Sure, having one or two nice wins here every once in a while is great, but that's not what's going to sustain you. I want you trading not for just a couple of months and then blowing everything and giving it all back. I want you trading for 20, 30 years. As a mentor, what type of a teacher would I be if I said, well, I've taught you something that's only going to be good for the next 2 weeks. After that, we have to start all over again. I mean, that'd be silly. If I'm teaching you how to swim, I want you to be able to swim for the rest of your life. Same thing with trading. I want consistency in your trading so that you can be trading 20, 30, 40 years down the road. Okay, so let's go on to rule number 2. Now that we know how to define the overall trend, whatever market, whatever type of trader we are, investor, short-term trader, makes absolutely no difference. Then we want to apply rule 2. So in other words, if our strategy generates a buy signal, whenever all the rules are met, whenever all the requirements have been met, this bar that it falls under must close in the top 25% of its range. Because now that is a clue, once again, coming from the market, not from some guy in a chat room or from some economic report, but coming from the market telling you that it wants to go higher on the short term. So in other words, here's a bar chart. I don't care if this is a 25 bar tick chart or I don't care if this is a monthly bar. It absolutely makes no difference. Let's say this is the bar that all the requirements come into play with your system, your strategy, and it's telling you to buy, okay? Now, what you want to do is make sure that it closes in the top quarter of its range because that is the market telling you that it wants to go higher on the short term, okay? So now that you're in sync with the overall trend and you've got the short-term trend in sync, now you've got a high level of consistency. If we look at this older generic chart we looked at before, we have a couple of bars here that close in the top 25%. As we can see, we initially went up right off the bat off this, and it could say, well, Steve, that's only up a little bit. Well, for all you know, these are monthly bars, all right? Maybe you had 5 or 6 straight months where they closed higher. Now you have another one closing here, and look what happened. Even better, right? Remember, it's all about consistency. Quit trying to focus on hitting home runs. Those happen every once in a while. That's great. But we're not concerned with that. We're only trying to be concerned with being in sync with what the market wants to do. That's your job as a trader. It's really simple. Find out what the market wants to do and then jump on board, okay? It doesn't get any simpler than that. There's no reason, in my opinion, to read economic reports. There's no reason to follow the company, the fundamental news. There's no reason to have 20 million indicators on your screen. I did that already for you 42 years ago. And so I'm here to tell you it doesn't work. There's no consistency in that. But there is consistency when you keep it simple like this. All right, let's look at the opposite side of the coin here. What if you get a sell signal? Well, remember, you're below the 50-period moving average, and when all the requirements are met, don't sell until you see that bar or a next bar close in the bottom 25% of its range, okay? So as you see here, this generic bar, it makes no difference what market or what time frame it is. It closed in the bottom quarter of its range. So that's a sign coming from the market, coming from the source, that the overall trend is down because we're below the 50, and the short-term trend is going lower because it wants to go lower. All right? So this is the market telling you it wants to go lower on the short term. It's not some guy in a chat room. It's not even some guy in a webinar. Why should you listen to me? You should be listening to the market. I don't tell you what's going to happen in the stock or what's going to happen in the market. I don't believe in that. You should figure out for yourself what you think is going to happen. We give you all the tools and information. So this is the market telling you it wants to go lower on the short term. So as we look at that example again, we're below the 50. Okay, we see a bar here that closes in the bottom 25%. So now you have the overall and the short-term trend in sync. Look what happened, okay? Do you see the level of consistency you have just added onto your trading by applying these two simple rules? Now, you don't have to believe me. In fact, I don't want you to believe me. I want you to go and research this. Go on your own, but we still have another good half hour, 45 minutes left on this webinar, but you can still, I'm sure most of you are looking at charts while I'm speaking. Do the research, do the due diligence on this. Look for stocks, futures, currency pairs above or below the 50, and then watch the consistency of how high or how low they continue to go, and then see those bars that closing in the bottom are 25%. These are all clues coming from the source of what you're trading. There's no need to listen to anything else other than the chart in front of you. All right. Now, the good news is that you just were taught two of the rules of strategy number 4. This is our most consistent and popular strategy to date. This was something I was taught some 4 decades ago on the floor of the Pacific Stock Exchange, and I continue to use in some capacity in my own trading on a daily basis. So this is how powerful but how simple this strategy is. I just gave you half of the rules to this particular strategy. So let's talk about some of the highlights here. It's designed for traders looking to catch momentum. And when we say momentum, we're not talking about some move that's going to take it up to the new highs or the stratosphere, but we're just talking about something that has a nice level of a trend to it, okay? Because we're just looking to catch momentum of that trend. It's a pattern recognition strategy. So there are 4 rules altogether. We just gave you 2 of those rules, and then there are 2 other rules, which I'm sorry I cannot divulge right now. It wouldn't be fair to the traders around the world. We have traders in over 115 countries and in every state in the United States trading strategy number 4. So I don't think they'd be very happy if I just gave away all the rules for free. But I gave you 2 of the rules. I gave you 50% of the strategy rules, okay? It uses only one indicator. It doesn't get any simpler than that, right? And guess what? You already know what it is. It's the 50-period moving average, because that will tell you whether you are a buyer or whether you are a seller. All right, so let's look at some recent strategy number 4 examples. And while you're looking at this, remember to view those 2 rules to see how those 2 rules came into play in all of these setups and how powerful they are and how simple they are. But most of all, how you just learn them and you can start looking for them as soon as we conclude this presentation in just about 45 minutes. And I'm also going to share with you all the examples that you're going to be seeing have been taken from using our PTS Primo Charting Platform. This is the educational platform that generates strategy number 4 setups. In fact, let's go through the process. If you had our platform, I want to show you how simple it is, because we just don't talk about simplicity in a trading strategy. We also want our platform to be simple as well. So we specifically designed this platform, Pro Trader Strategies and myself, to make it simple. Trust me, I've used scores, I've used dozens of platforms in my 42 plus experience of trading. And some of them have been great. Others have been so complicated. It took me hours just to figure out how to enter or come up with a chart. Seriously, I mean, it's just so complicated, just ridiculous. So I had a goal specifically when I designed this with Pro Trader Strategies, that I wanted to make it as simple as possible so that someone who had never traded before in their life could use this and everything would be there one click away, and it would be so simple to access any of our different features. So let me show you what the process would be with our platform and how simple it is to trade. Here's our platform, and here's that stock we looked at earlier, MYGN, okay? Once again, most traders, the way they've been taught traditionally, would say, well, there's nothing happening here. I mean, I looked at the earnings. They're supposed to be flat to worse, so I don't want to do anything here, and the company doesn't have a really good PE ratio. Also, this is a flat market. The indicators I'm watching are just basically going sideways. There's no indication of anything here. And lastly, that chat room I go to says that there's major resistance, and this is a range market. So you shouldn't touch this, all right? Does this kind of analysis sound familiar? Is this the way you make your decisions? You see how there was a common denominator in everything I said right now? All my justification for making a decision was based off an outside source. Either what the institutions were doing, what some guy in a chat room was doing, what the earnings were going to be, what the fundamental economic conditions were. But they weren't based off the chart. All right, so this is what we're trying to do. It's very complicated when you use all of those different things. Why don't we simplify it? So we want to clean our chart and just only add one indicator. That's the buy-sell line. Now, we call the 50-period moving average the buy-sell line because it tells you whether you're going to be a buyer or a seller. That's how simple it is. So once you click on the buy-sell line, we put it here in the top left-hand corner of the green strategy tab. you get this drop-down menu, and you click on 50-period simple moving average, one of the 4 features of the buy-sell line. And where is price in relation to the 50-period moving average? Well, price has been above, okay? So what is the market? Not some guy in a chat room, not even some guy in a Saturday morning webinar. What's the market telling you? Obviously, it's telling you the overall trend is up. Okay, do we want to sell if the overall trend is up? Absolutely not. So now we want to apply rule number 2. We want to look for bars that close in the top quarter of their range. Now, here are 2 perfect examples right here on July 29th and July 30th. Now, obviously, there are some more here. This one closed in the top, so did this, so did this. But remember, we're following the rules to strategy number 4 in these examples. Now, strategy number 4 has a high level of consistency, and it applies these 2 rules. I can't give you all of the rules to strategy number 4. It wouldn't be fair. But let's just say you took the course, and now you are thinking that these are valid strategy 4 setups. So in order to check your work, remember this is an educational platform, you click on strategy 4. The drop-down menu appears, and you simply click on signal arrow, because that will give you the feedback to see if you're right. Remember, we are an educational company. We're providing these arrows as a way to check your work. But ultimately, I want you to be able to look at a chart, apply 50-period moving average, and say for yourself, this is a buy signal. I don't need the arrows to tell me that, okay? But while you're learning, you apply the signal arrows, and guess what? You're right. And remember, even though these closed in the top, they didn't meet all of the rules of strategy 4, the 2 remaining rules. But these 2 did. So with just based off that information, remember, we didn't care about what the earnings are. We didn't care about what the institutions were doing. Maybe someone would say, well, Steve, there's major pressure of the institutions. That's why the stock can't go up. I stopped following the institutions 40 years ago. I don't look at that stuff. I mean, if I don't look at it and I'm still here, why would you need to look at that? I don't look at volume. I don't care about the earnings. You know, remember, it's the easiest thing in the world to overcomplicate your trading. It's the most difficult thing in the world to simplify it. So on July 29th and 30th, 2 buy signals were generated. This is not a system, meaning that you don't have to take it. It's up to you. You can purchase calls. You can actually buy the stock, or you can say, I'm not going to do anything here. I'm going to wait. But either way, the stock was telling you it wanted to go higher, and it gained 20 points in 3 days. All right? Someone saying, how did you guys know that? We don't know how high something was going to go. We never predict that. We're not a prediction company. We just know that the market wanted to go higher. Remember, as I said earlier, your job as a trader is twofold. Listen to the market. Find out what it wants to do. Does it want to go up? Does it want to go down? And then once you decide based on the tools we teach you, then just jump on board. It's that simple. You don't have to overcomplicate things. Let's look at this example. Okay, well, this is an old example in May, and someone would say, well, Steve, this is obviously a strong market, right? We've been going higher, and this is where you want to buy. We're making higher highs, and most of the closes were up, and we're in a short-term uptrend, okay? Well, we apply the buy-sell line. That's the most important thing. Don't just use your opinions. What is the market telling you? Once we apply the 50-period moving average, the market is telling us that we had one close above the 50, but we went right back down below. So with the majority of the bars below the 50, this trend is still lower. So that means we really don't want to be a buyer yet. We would have to see maybe 2 to 5 closes above that 50-period moving to tell us that the overall trend is up. So all we have is 1. So as you can see here, this bar closed in the bottom 25% of its range. All right? So that's rule number 2. 2 more rules are met. So if you've taken our course, you say to yourself, you know what? This is a sell signal. To check your work while you're a beginning student, you click on strategy 4. You want to check your work, you click on signal arrow, and you're right. You're starting to learn the process. You see how simple this is. Now, if you wanted to, you could take the trade, buy puts, or just say to yourself, well, listen, the spiders, maybe that means the market's going to go down because the spiders are the ETF for the S&P 500. Either way, it's a negative outlook on the market coming from the market, not coming from me. Not coming from earnings reports, not coming from what's going on in China. It's just the market telling you it wants to go lower. And in the following weeks, it dropped 12 points. Now, 12 points may not seem like a lot, but that transferred over onto over 1,100 Dow Jones Industrial Average points in the following 2 to 3 weeks, okay? So do you think that could have helped you get an idea of what the market was going to do? Our students always say, well, how did you know the market was going to go down? Did you guys research a lot of fundamental stuff, or You can if you want to, but remember the theme today is not to overcomplicate your trading. There's absolutely no reason to look at that. Remember, it's very difficult to simplify your trading because you have to have the courage to let go of this so-called traditional wisdom that's supposed to work. But once you let go, you're in for the ride of your life because you're free. It's like taking a weight off your shoulders, and trading is really simple. All right, so let's look at some more recent strategy number 4 signals, okay? Let's just go down the list of things that have happened in the last month or so. All right, CPA, we're above the 50-period moving average at the end of June. Here's our buy signal right here. We're above the 50. We closed in the top 25%, and the stock quickly went up 9 points coming into July, okay? Here's another example to the downside, and this is a little bit more aggressive because usually we say, well, you want to have roughly about 3 bars either closing above or below, but if you're a more aggressive trader, this still qualifies as a sell signal. You closed below the 50. It was only 1 bar, but it met all the rules. You closed in the bottom 25%. So if you wanted to, you could have taken this for a quick 10 points coming into the end of May and June. Here's an example in ZROZ. This was in the end of July. As we can see here, price is kind of going sideways. We have a bar that closes above the 50, another one that closes above the 50. They're both in the top 25% of the range. They met all of the rules of the strategy. And about 3 or 4 days later, the stock started to take off. You'll see this many times where strategy 4 will generate a signal, and it'll take maybe a couple of days, sometimes a couple of weeks even before something happens. So you have the option whether to stay in if you want to or not. But sometimes it happens the very next day. If we backtrack, we see here the very next day we can continue to go lower. But as we go here, we took about a good week before we started to kick into the upside. But that was a nice 14 points in a little over a week. As we look at ACR, here's another example. We had a cluster of sell signals, 2 sell signals below the 50. Closing in the bottom portion of the range. They initially started to go down, but look what happened. We started to bounce back up. This is where you may want to stay a bit in the trade because remember, the market is telling us it wants to go lower. Why? Because it's below the 50-period moving average and because those setup bars closed in the bottom 25%. But sometimes it takes a while for that to happen. So provided where you place your stop, you either could have been stopped out of this trade, maybe with a small loss, maybe with a small gain, or with you could still be in the trade if you had a deeper stop. Now, someone's saying, well, where do I put my stop? Well, that's up to you. But the good news is we have upwards of 6 or 7 different stop placements to meet your needs. So in other words, if you're a more aggressive trader, maybe you were using the stop or you track all the trades down here and then you got stopped out somewhere around these levels with a small profit. If you're someone who likes to give yourself more room, maybe you would place your stop up here using our stop level number 2, and you would continue to still be in this trade. And that would have been probably the best one because look what happened. Once again, people would say, well, how did you guys know this thing was going to gap down like that? We don't know. All we know is what the market wants to do. As long as it's telling us it wants to go lower, we're going to look at it from a seller's bias. That's all. How about VRSN? Okay, this was in June coming into July. As we can see here, we came all the way down to the 50. We had 1 close below and then 1 quick close right back up above. And someone would say, well, Steve, why isn't this a sell? We closed below. We're in the bottom portion because it didn't meet the remaining rules of the strategy. Remember, there are still 2 more rules that need to be met. But the good news is that the next bar met those rules. It's above the 50. It closes above in the top portion of its range. And the remaining rules of the strategy were met. So 24 points coming into the beginning of last month, July. On the downside here, NEWR, as we can see, we are below the 50. We start to rally, but as we're rallying, we're oscillating above and below the 50. So the market is trying to make up its mind here. Is it going to go higher or lower? Because it closes below, back above, below, back above. But then we have a bar that closes below in the bottom 25%, and it meets all of the remaining rules of the strategy. You see, while we were here, none of the rules were met, so there were no signals being generated. But this was a valid sell signal just 3 days before a 32-point drop on August 7th. Once again, I have no idea why this dropped. In fact, someone was saying here, well, do you know the reason why or what the justification is? And I said, no, and I don't really care. Because how would that change anything? It still doesn't affect the rules of why I got in. So I'm really not concerned. There's no real reason. Probably with, I would say the majority of our exit points, you probably would have exited on the close, or I should say on the opening right here. So either way, I have a really nice profit and I move on to the next one. I really am not concerned. You've heard me, if you've attended my presentations in the past, you've heard me say before that, listening to news and reports and things of that nature are like someone telling you when you're walking down the street that it's raining and the reason why it's raining. Well, if you're getting soaked and you don't have an umbrella, you really don't care why, there's a cold front moving in when you had no idea, or, when the temperature drops to a certain point and, the velocity of the winds meets the warm front, then rain is, you really don't care why. All you're concerned of is that are you going to continue to be wet, or are you going to, protect yourself? And it's the same thing with trading. I really am not concerned with what the, justification is why this gap down. It makes no absolute difference to me. What I'm concerned with is if I'm in sync with the market, if I'm listening to the market. And with this setup, I was. There's another example. Here's one in GH. As you can see right here, we were pulling back. We closed one bar below the 50, and then here's a bar that closes above the 50 and in the top 25% of its range. Once again, another gap up 22 points the next day. I have no absolute reason why this went up other than the market told me it wanted to go higher. That's the only thing I'm interested in at this point. And then lastly, Tesla, okay? Tesla is below the 50. So I don't know why anyone in the world would want to buy this stock if it's below the 50. And someone would say, well, Steve, you could have bought here and made a quick trade to the upside on this bounce. Well, sure you could have, okay? But don't you think you would have rather have taken the consistent approach, which is being in sync with the overall trend, looking for a bar that closes in the bottom 25%, and then being able to ride this all the way down for 70 points? You're going to sleep a lot better, and you're going to be more in sync with the market if you follow these two simple rules. All right, now we know that we're talking and looking mainly at daily bars. We can also apply this to weekly time frames. We know we have a lot of investors here. So let's look at a weekly bar in HAL, okay, a weekly time frame in Halbert. The same rules apply. We're below the 50 on a weekly time frame. All these bars are weekly bars. So we're not going to be a buyer if we're a swing trader or an investor. And then we apply the same setups. Bars closing in the bottom 25%. You could have taken any one of these setups for some nice profits, some better than others. But had you taken the very first back here in October of 2018, that's a 20-point gain to the downside. Sure, you could have said, well, Steve, I'd like to look and see what the fundamental news of the company is doing. I'd rather follow and see, who the CEO is or the direction of the company. Listen, I'm not here to tell you you can't do that, but I'm here to say, why would you care? I mean, the market's telling you already at this point, going back nearly 2 years, that it's below the 50. That means it wants to go lower. So I don't care if the company's turning around. All I care is what the stock is telling me. Now, even though we're looking at 50 period, I should say weekly bars, we still apply the 50 period moving average, the same process. Here's a weekly chart in PSA, all right? Once again, most people would say nothing happening here, nothing to see here, but actually there is. It's not resistance. No, it's not. That's not what we're talking about. What we're talking about is the 50 period moving average. The same process applies to swing traders or investors because we're above the 50. So I don't care if there's resistance with some $10,000 institutional course you took or what some class is telling you. The market is telling me it wants to go higher. I don't care what the institutions are doing. All right? And then according to the rules we taught you, signal arrow, we verify that there's a buy signal here and then another one here. So you have two opportunities to buy. Who cares if the institutions are sellers? I used to work with the institutions all the time, and trust me, they have no higher level of consistency than anyone else. So why would I base my trades off of them if they're not that consistent? I just want to listen to what the market's telling me, and you had a nice 30-point rise here coming into June of this year. Now, you can also use this as a market directional tool. We talked about this earlier. You can apply this to ETF or indices. Let's look at an older chart here of the spiders. I specifically picked this. This is about 7 or 8 months ago, but I wanted to show you how well this would have worked at the end of last year. Here's a daily chart of the spiders, the ETF that represents the S&P 500 index, okay? Now, if you recall at the end of the year, a lot of people thought we had topped out. The market took a terrible nosedive and really started to scare a lot of people. Everyone thought that's it. That's the end of the bull market. We're topping out, but we didn't know if it was or not, but all we did was follow what the market wanted to do at the time. Now, what happened here? We were below the 50 period moving average on the spiders at the end of or beginning of December. We had one close above, but then one closed right back down below. So not enough to tell us that we were going higher. And then what happens here? We closed in the bottom 25%, and then all of the rules, the remaining rules of strategy 4 were met. So what's that telling us? It's telling us that in the overall trend and the short-term trend, and according to the pattern we teach you in the course, the market really wants to go lower. Now, if you don't trade the spiders, that's okay, because don't you think that this clue alone would have told you that, well, I think the market's probably going to be going down? Because if the ETF that represents the index is signaling to go lower, don't you think the index is going to go lower, and the Dow Jones ultimately? And then we all know what happened. The market fell out of bed coming into the beginning of this year, all right? 27 points on the spiders. Now that transferred over onto over 3,000 points in 3 weeks in the Dow. So don't you think this strategy could have helped you, even if you used it as a market directional tool, okay? You think it can help you in the future? All right, so let's recap before we go into question and answer portion. Remember, always use the buy-sell line. That's the 50-period moving average. That's the first rule in today's presentation. Why? Because this is what tells you what the overall market wants to do. Remember, not some guy in a chat room, not some economic report, but the market tells you what the overall trend is. Listen to what the market, that's the thing you're trading, right? Why don't you listen to what it wants to do? And it's telling you if price is above, well, then the overall trend is up. Now, if you get a signal, I don't care what your strategy is, could be one of mine, could be one of yours, could be someone else's, but wherever it's generated, you want to only buy if it closes in the top 25% of its range, and you want to only sell that if it closes in the bottom 25% of its range. Now, also, it stands to reason it should be in sync with the buy-sell line. So obviously, if you get a buy signal and it closes in the top 25% of its range, you don't want that buy signal to be below the 50-period moving average. Trust me, I've seen a million buy signals where our students would say, well, Steve, it was a valid signal. The pattern was met and closed in the top 25% of its range. I don't understand why I lost. And the first thing I always tell them, I say, is where is price in relation to the buy-sell line, the 50-period moving average? That's the first rule. And they'll look at the chart and they go, oh, it's below. I say, exactly. See, that's the overall trend. You don't want to buck the overall trend. Now, am I guaranteeing you that this will always work? No. I'm just trying to instill a level of consistency in your trading, because most likely you're here today because you don't have that consistency you've been searching for. Now, when we put these two together, they make up half of the rules to strategy number 4. This is our most successful in terms of consistency in methods that we have at Pro Trader Strategies and Specialist Trading. And lastly, we show you how simple it is to apply this, to implement strategy number 4 trading on our PTS Primo charts. It is so simple and so easy because we specifically designed it that way. So you don't have to open up a bunch of windows, you don't have to analyze things, it's just right there. Okay, so ask yourself, do you think these edges, rules 1 and 2, could have helped your trading this past year? Look at some charts. I'm sure most of you are looking at charts right now. I'm sure you're saying to yourself, wow, this stuff is all over the place. How come I never saw this? Because we're never trained to see this. Just the same way I was. I was never trained to look at the markets this way. I was always trained to find out what the earnings are going to be. I was always trained to listen to that trading guru who's supposed to know everything, right? And he knows what to buy or sell. I was always trained to have 10, 20 different indicators on my screen. But none of that held a high level of consistency until I started learning the Specialist Edge. All right, we have a great discount for all of you taking the time out of your Saturday morning here. We want to offer you strategy number 4. This is our strategy number 4 special for Saturday attendees. We're going to give you instant course access, but we're not going to stop there. We're actually going to throw in 6 months of our PTS Primo Charting Platform. You're going to get full use of the PTS Primo Charting Platform for 6 months. Now, normally this will cost you close to $1,000 for 6 months of usage. We're not going to charge you that. In fact, we're not going to charge you anything. We're giving you 6 months free. All right? All you have to do is pay for strategy number 4. But here's the good news. It's not just strategy number 4. There is so much more included with your 6-month free subscription to our platform. You're also getting, along with strategy number 4, the buy-sell line, which is right there automatically for you, and you have 4 different buy-sell line features. You're getting our proprietary exit level feature, okay? This automatically decides different exit levels for you to choose from. It's up to you where you want to use this, or even if you don't want to use it at all, but it's a proprietary tool that we have specifically designed to make it simple in determining your exit levels. over 90 of the most prominent technical indicators, but here is the real jewel, in my opinion, our signal scanner. Now, I've used signal scanners in the past that have been so complicated, I've struggled with them for hours until I finally said, you know what, I'm going to open up another platform. I can't figure out how to get a scanner on this thing. But look how simple it is on our platform. Once you are looking at a chart, you're going to have strategy number 4 there, and you're going to click on, once again, the strategy 4 drop-down menu right there in the green strategy tab. Where you used to click on the signal arrows, just simply click down to scanner, and you'll see this window appear. Okay? The first thing you want to do is click on load symbols. We provide you with symbol lists, okay? NASDAQ, S&P, Dow Jones, Toronto Exchange, European exchanges, Bitcoin, currency pairs, futures. You can even make up your own basket of lists to have. But whatever you choose from the list, you will see appear in a matter of seconds, okay, in this little spreadsheet. All right, once you see that appear in about 5 or 10 seconds, all you have to do is click on scan. It automatically knows it's scanning for strategy number 4. And in about 30 seconds, you'll see a series of green and red bars. The green bars mean that there's a buy signal in the corresponding stock. The red ones mean that there's a sell signal. It's that simple. So on a nightly basis, you can see the stocks for the next day's trading that have strategy number 4 setups. Let me show you what you would have seen if you would have been a strategy number 4 and a PTS Primo Charting Platform user just about a week or so ago. You would have scanned and seen that on the night of the 5th, a buy signal was generated in a Roku, R-O-K-U, okay? This was just this past week. This was on Monday. So you would have said to yourself, well, okay, we are above the 50. We close in the top 25%. It's those rules, and also it meets all the other rules and the strategy scanner scan for a valid strategy. So I think I'll take this. Maybe I'll buy the calls. Maybe I'll just buy the stock. And in 3 days, the stock jumped up 22 points, okay? In fact, this snapshot, I believe, was taken Thursday. I believe on Friday, yesterday, it went up even more, closer to 25, 27 points. Once again, we have no idea why it gapped up like that. And someone would say, well, how would you know that? How did you know it was going to gap up? I mean, the stock was doing nothing. Well, according to what we teach you in the strategy number 4 course, no, the stock was screaming that it wanted to go higher. But we teach you exactly what to look for. Now, you're also going to get Bloomberg TV. Remember, we're not a fundamental company. We don't proclaim to know anything about fundamental news, but we know a lot of traders like to view fundamental news. We're not here to tell you what not to do. We're just giving you sound fundamental information. So if it's in your best interest to listen to economic reports, earnings, who are we to stop you from trading that way? So all you have to do is click on the media page icon in the green strategy tab, and you'll see free Bloomberg TV on your screen. Any economic report, any earnings report, fundamental news as it's happening live is on your screen there, okay? Lastly, this all comes with great personalized tech support. We have rave reviews on our tech support, some testimonials on our websites, people saying that it's the best tech support they've ever had. Most of the issues are resolved within the same day. So great, great tech support. All right, so let's break this down. Strategy number 4, special, plus 6 months of the PTS Primo Charting Platform. Now, normally, the strategy number 4 special will cost you close to $1,700, all right? We don't want to do that. We don't want to stress you out by having you spend more money than you have to. So we're taking off that 6-month fee of the platform, and we're only going to charge you for strategy number 4, which is $695, okay? This includes 6 months of the platform for free. This is a great, great offer, and you can even work with Pro Trader Strategies a payment plan if you like. If $695 is still too difficult for you to come up with in one lump payment, don't worry. They can still work together with a payment plan for $695 for you. This is a great offer to get acquainted with us with one of our most consistent strategies, something that I use on a daily basis. Here's how to take advantage of this. Contact Pro Trader Strategies. They are in charge of all of our courses and all of our tech support, as well as our pricing and discounting. They're the ones to talk to if you want to put together a payment plan. I would suggest if you want more information concerning pricing or discounts, call them directly. There's absolutely no obligation at area code 310-598-6677. They'd be happy to work with you. Once again, there's absolutely no obligation. They have trained trading consultants manning the phones right now. They would be happy to answer any question without any obligation on your part. Now, that link you see at the very bottom is the sign-up page link. It will also give you more information on strategy number 4. It's not a live link, but if you go to the chat box on the far right-hand corner, you will see that they have posted a live link. So if you're interested, please click that on. And as I stated, I'll reserve the last couple of minutes here for any questions you may have. So go to your question and answer box You see that on the far right-hand corner. Just type in whatever question you're interested in, and I'll answer it right now. Okay, Julio asks, what time frame does it work on? Well, remember, this works on any time frame. Strategy number 4 and our platform and all of our methods, okay? Any method, any technique that we have, that we teach our students, that we have on our platform, can be applied to any market, any time frame, and any direction. You know, it was always my pet peeve when I would see, when I was first learning how to trade, well, someone would say, we have this great strategy, it's fantastic. Then I call them up or I'd email them and ask them, well, does this work on the E-minis? And they'd say, oh, no, this only works on weekly charts on stocks. And I say, well, how do you have a strategy that only works on a specific market and a specific time frame? They say, well, it's really that fine-tuned just for that. And so, you know, you never want something that is just for, you know, that is so tightly wound on just one market, because most likely if that market changes environment, it's not going to work well. So there's no reason to ever ask what time frame or what market, because it works on every market, any time frame, any direction, okay? Chris asks, if you buy stocks, can you sell them as puts? Can you intermix stocks and options to buy and sell? Well, once again, we're not a broker. We're not analysts. We don't, you know, proclaim to give you any type of analysis in that range, because we don't, remember, we're only an educational company. That is more something you would have to speak to an advisor. We don't give any advice on trading. All we know is that we teach you high probability setups for buying and selling whatever market you want. Now, how you decide to apply them is up to you. Many of our students apply our setups with options. Still, other of our students apply them by simply buying the stock. Others use spreads, okay? It's entirely up to you. Others like to use hedges. It's not our goal to tell you how to trade. Our goal is simply to teach you these high probability setups and then let you decide, okay? So that's what our mission is, to teach you about these high probability setups. Eric asks, Steve, what are your thoughts about forex robots? Someone told me big banks use them. Well, once again, I'm not here to tell you what my opinion is about that, because that's not what a good mentor does. All I'm here to do is to teach you. Remember, as I stated in the opening, I think I stated that the reason why most traders take themselves out of the game and use their decision making based off of what other people say and do is because you don't feel as if you're educated enough. And so that's the first thing you do, is you take yourself out of the game and rely on other people's opinions or thoughts. That is a misrepresentation on a teacher and educator's part. What type of education would I be giving you if I gave you my personal biases and beliefs? That's not what a good mentor is supposed to do. You're supposed to just simply listen to what the market wants to do, not what some institutions or banks are doing. I could care less what the banks are doing. I mean, I don't care. I don't care about robots, so that's my opinion. I only listen to what the market I'm trading is telling me. Remember, all those things, the only thing they justify is in making your trading more complicated. The goal of today's presentation was to tell you that trading can be simplified. But most traders don't want to simplify their trading. They want to overcomplicate it, because we've always been taught that the more overcomplicated something is, the more valid it will be, and the more money we'll make, and the more consistent we'll be. But it's actually the opposite. In my opinion, in my experience, it's once you finally strip away those things that are supposed to work, that's when trading starts to become more consistent. But you would say to yourself, well, then why doesn't everyone do that? Because it takes courage, because most of us are taught that we're supposed to listen to what the banks are doing. We're supposed to listen to what the forex markets are doing in terms of fundamental research and robots. But once you let go of that, that's when you become consistent. So I really am not concerned with any of that. I've been trading for 42 years. I stopped looking at news some 40 years ago. I stopped concerning myself with the banks or the institutions are doing. So if I'm still here and I have not even looked at that stuff, then you have to see that there must be something to this, okay? Joe is asking, how different is this from the scanner? I'm not sure what you mean by the scanner. We have different we have a lot of different scanners. You know, we have multi-scanners. We have scanners that just scan for high probability setups with candlesticks. We have scanners for the PET-D. So I'm not sure exactly, Joe, what you're asking, but that would probably, you know, since this is more of a platform question, you know, contact Pro Trader Strategies. They're in charge of all the tech support. They're in charge of all the, you know, trade, or not trading, but the usage and the different ways to apply things on the platform. Okay, so that would probably be a question for them. But remember, there's no obligation. They're not going to ask you to say, well, I'll answer that, but this comes with you purchasing the platform. It's not. We're not based like that. We're really trying to educate you. Julio asks, does this add-on work on MT5? Yes, I believe it does, Julio. I'm not sure about the add-ons. If the add-ons come with this, they are available, but that may have to be for an extra price. That's why we always, that's why we threw in 6 months of the platform, so there's no real reason to use this with your add-on, but I would contact Pro Trader Strategies. I'm not sure if the add-ons are included with the $695, okay? The add-ons, if those of you who aren't familiar, an add-on is simply getting the add-on or the formula to put onto your specific platform where it automatically designates the up and down arrows. That's what an add-on is, and you download that onto your platform. That can be TradeStation, can be Metastock, MT5, Sierra Charts, Ninja Traders, and we have add-ons for all of those platforms. But at this point, I don't know if those are included in this price. Now, they are available, as we stated, but I'm not sure if they're included. I would contact Pro Trader Strategies, okay? Now, as we conclude here, I just want to say, remember, what I'm sharing with you is in no way, I hope I'm not trying to come across as being arrogant or, trying to be standoffish when I say I don't care about those things. I'm really being sincere in saying that I stopped looking at news. I stopped concerning myself with banks and institutions 4 decades ago. And if it comes across as arrogant or, condescending, I apologize. What I'm really trying to, convey to you is that if I don't need it, and if I haven't been using it, and that I'm still here, there's no reason why you have to feel you have to cling on to that. That's my only goal. I'm not trying to tell you that you're doing something wrong. I'm just trying to show you that if I'm still here trading and I've never used that, then you can do the same thing. There's no reason to bog down your trading with looking at that and being concerned with what outside forces are doing. There really isn't. So I apologize if it came across as being arrogant or condescending. I mean to do that. I'm simply, as an educator, trying to teach you and show you that, if you don't need this specific so-called traditional tool, then just release it, let it go, because it'll only bog you down and make your trading more complicated, okay? I just want you to see our sincerity into teaching you. We really are an educational company, and that's our only goal in trying to teach you. There's enough profits, trust me, there are enough profits to go around for any and everyone trading. This isn't something that it's a finite source that, well, I can only teach so many because there are only so many profits on a daily basis. So I don't really want to give this up to everyone because it wouldn't be fair, because there's only so many profits, and I want to have some for myself too. That's a poverty way of thinking of life. It's a poverty consciousness. The markets, there's enough to go around for everyone, as much as you want. It's a never-ending source of profits. So why wouldn't I share with you what's worked for me? I simply want to teach you things that have worked so that you can be trading and not have a good month or a great week, but that you can have a good decade or maybe the next 3 or 4 decades. That's what my goal is as your educator, okay? And I hope I've conveyed that today. So as we conclude, remember, this is a great offer, $695. It gives you 6 months of the platform. And on top of that, if you want to construct a payment plan, contact Pro Trader Strategies. They would be happy to work with you. So for a small deposit, you can still be up and running and not having to pay the complete $695 price, okay? As we conclude here, I want to say thank you so much for attending. As we look at one last look at our disclaimer here, I really wish you the best of luck, but most importantly, I look forward to all of you becoming students of mine at Specialist Training and Pro Trader Strategies, and all of you becoming members of the Strategy Number 4 course. Thank you so much for attending today. Have a great rest of your day. Have a great weekend, and I shall see you next time. Bye-bye.